Hello, today is September 10th, 2016. Let's review the significance of Friday's drop, both in the long term and in the short term. We did have sell signals for last week, but we also said Thursday's pattern was a basically positive pattern that would only be invalidated if we gapped under the lows, which we did. We said if support held under this MEJT target of 2177.48, that we had a daily pattern which tends to rally all day long. Well, it was obvious from the open support under this level would not hold. So those calls are off the table before the market opened. Friday's pattern tends to rally all day long. On infrequent occasions, it has a stinky inversion like this, where it does the precise opposite. We satisfied the MEJT target from August 2. We came close to the target from July 8th, but its equivalent printed after the market closed. That's not enough to satisfy the target, but it is enough to have relevance and suggests we might get a strong rally Monday. We'll see how strong in just a minute. During the day, early on, we had signals that ultimately both lower and higher prices would print. We got lower prices, obviously, but not the higher ones. Ultimately, this price of 2161.71 should print. It doesn't have to print anytime soon, but usually does. In the afternoon, MEJT said this drop would not stick and gives us a target of 2147.27, most likely to print Monday. One of the times in which MEJT targets have a tendency to fail to print within their preferred time frame would be at major changes in trend. The other is during periods of strong impulsive moves. But that doesn't apply to the ultimate signal. There's no time limit, but usually you don't have to wait long. Let's take a look at what the charts had been saying. This was the half-a-day chart. We got a sell signal over a month ago. This is the sequential sell. We got a bar 13 finishing early combo sell. That was 2 weeks ago. Until Friday's trade, that really hadn't led to very much. And when things don't lead to much on one time frame, I get suspicious that the move might not work on other time frames. These bar 13s indicate markets which are overextended, but they don't have to correct. In terms of price, they can also correct in terms of time. So when you see that, you need confirmation for any move. This was the weekly chart. It was way back here in July that we got the combo sell on the weekly chart. It was 2 weeks ago we got the early finish to bar 13 of the sequential sell. Again, this indicates the market's overextended, but you really need confirmation because when these things fail, they fail in grand style. The big problem was we didn't have breadth deterioration. Well, DeMark's indicators were really developed on the daily chart, and even though they've not worked very well in this rally, they worked quite well on this drop. Here's number 13 of the sequential sell. The last 3 bars of the combo don't have to obey all the rules, so we got the drop right when the signals indicated, but again, without confirmation, there's nothing just in these charts that would indicate we couldn't just peter out and correct in terms of time rather than in terms of price. Of course, it could fail too. Speaking of time, we had a number of things indicating that the early part of this week, I said Tuesday, Wednesday, or Thursday, so naturally the big move comes on Friday, would be a time to look for a change in trend. We had crossing of these lines of the triangle. I think we came pretty close to that. We also had a price we thought would print to 2196.67, and that missed by 3 points. It's still a miss, but it's 3 points. Another way to get a time signal comes by a trick somebody else showed me. You subtract 945 calendar days. If you subtract 945 days from Friday, you get February 7th, 2014. You'll see earlier in the week we had this low here, and if this indicator works, it anticipates a decline lasting about 3 weeks to go along with this rally lasting about 3 weeks. Well, how much are we, that's not the chart I want. So how much are we going to drop, and how quickly are we going to drop? Well, this is the chart I've been using. I'm not so certain it's correct. We'll come back to that in just a minute. This is a valid break of the TD trend line. You connect these lines here, the gap under it. You take this level here and you extend it to the point of the break, and you get a target somewhere in the 2030s. So ideally what should happen is we should keep dropping, not necessarily in a straight line, and hit the 2030s. But if we reverse immediately, this break does not count. So what are the chances we're going to reverse immediately? Well, I think depending on Monday's open, they're pretty good. We have some unfilled targets. I should show you this other one first. It's not the one I want. Here's the slanting trend line. We have a break in a straight line down. One of my rules is there's a strong tendency for us to retrace to this line at some point. It doesn't have to be immediately, but a retracement to the line implies all of Friday's drop will be recovered at some point. We have a hole in the wall, a gap here. These don't have to fill immediately, although they normally do. But I think that gap is going to fill at some time. We have a wall of selling into the close, and the close right at the low of the day. These things don't always work when the market's in free fall, but they work a high percentage of the time, and if they work, there should be a strong gap up Monday. The fact that we have a ersatz page 120 signal to buy from the MEJT system also goes along with it. We have some higher MEJT targets that should print. We also have bar 13 of a combo and sequential signal to buy. On the 15-minute chart, we have MEJT divergence. We also have a wave count which doesn't break any rules, but it doesn't really look right to me. If that's A and that's B, that's not much of a wave C. I suspect something else is going on. I tried to turn this into a diagonal triangle. I couldn't. I think this might be what's going on. I think this might be A, this might be B, and that's a retracement of 23.6% of A, and we could have a wave C up. Can't spell, can I? Now I can spell. It may seem incredible that a drop like this could correct quickly, but if you look at the last picture of the first chapter in my book, you will see a chart just like this, where there was a strong gap up and these MEJT targets were hit. If we gap up strongly Monday, I think it could lead to a very strong rally. I think we could see these prices and higher. If that doesn't happen, we have targets in the 2030s. And that's today's call.